Thank you, Senator Warner. Senator Tillis is from North Carolina is recognized.
Thank you, Mr. Chairman. Chair Powell, thank you for being here. You mentioned in your opening statement you committed to regular and frequent contact. I can attest to the fact that you have regularly contacted my office, and anytime we've had a request for a conversation, you've been very prompt, so I appreciate you for your responsiveness. I want to talk a little bit about the current extraordinary inflationary pressures and the tools that the Fed has to deal with it. Of course, you could have a benchmark rate increase. We know what that would have as a consequence for raising the price of lending and ultimately affecting the cost of buying a car or buying a house or just making ends meet. Your other option is to reduce the balance sheet, particularly from some of the COVID area bond buying programs. I believe that it was Governor Waller who just last month said that because of the alarming rate of inflation, the Fed should begin shrinking the asset portfolio without delay. And I think this week, the Fed president from Atlanta, Mr. Bostic, said he thinks the Fed should aggressively draw down the balance sheet by at least $100 billion a month. I know you went up from $15 billion to $30 billion, but that's a 3.5-time increase over the current run rate. So to what extent do you think, and give me an idea of discussions that you're having at the Fed to have a faster taper in lieu of a rate increase?
We haven't made any decisions. We had our first discussion of these issues about runoff, and as you mentioned, there are a number of different pieces to talk about. We had that at the December meeting. I expect we'll talk about it again at the January meeting. Again, just no decisions. But as we reflected in our minutes, we looked at what the Fed did last time, and I was there as we ended QE and then later started to have the balance sheet shrink, and we thought we looked at that experience and thought that's quite informative, but the economy's in a completely different place than it was when we ended asset purchases the last time. So the period of time between stopping purchases and beginning runoff will be shorter, and also the balance sheet's much bigger, and so the runoff can be faster. So I would say sooner and faster. That much is clear. Beyond that, we're not at a point of making decisions. At this point, we'll have another discussion, and I think we will be in a position to provide guidance at coming meetings. But we're mindful that the balance sheet is $9 trillion. It's far above where it needs to be, and
it's at the current drawdown rate. That's about a 24-year trajectory to retire the balance sheet. Is that right?
It would depend on the speed you assume.
Yeah. What sort of indicators are you looking at that would actually drive you to a faster taper, particularly based on some of the comments of the folks at the Fed?
We're looking at the whole range of things. This balance sheet is much shorter in duration than the one that we had at the end of the global financial crisis. That can play into it. I think we tend to do a lot of analysis. We tend to take 2, 3, 4 meetings to work these things through. I find that the best ideas sometimes take a while to surface. They did the last time on this issue, so it'll be part of the things that we're discussing and doing this year.
Okay, thank you for that. I should have also mentioned that I look forward to supporting your nomination.
Thank you.
I want to turn to bank mergers. Senate Bill 2155 gave us the opportunity to do some regulatory tailoring for some of the smaller banks, and I think it was largely successful. Appreciate the bipartisan effort to do it. But I still, bank mergers are one of the most highly regulated transactions that you could go through. It involves the federal regulators, including the Fed, the Department of Justice, and a lot of opportunities for outside interest groups and others to voice their opinions. But I'm getting the sense that moving forward, there may be a trend towards making it more difficult for some of the super regionals and other banks to move through the merger process. I tracked one recently that involved a North Carolina banking institution that seemed to take a bit longer than I thought it would have. So can you give me an assurance that there isn't a sort of increasing bias on the part of the federal regulators to make it more difficult for some of these super regional and smaller banks to actually get through a merger and acquisition process? Or am I missing Is this a trend that I should be concerned with, or do you believe that the financial regulators are still in a position to allow that ecosystem to continue to evolve, which I personally believe is very important for the viability of the U.S. banking system?
So we're still applying the same. The law hasn't changed, and our practices haven't changed. We're still working our way through, the applications that we have in front of us.
Okay, and I'll submit a question for the record on the status of the Fed payment system. Thank you. Thank you, Mr. Chair.
Thank you. Senator Warren from Massachusetts is recognized.
Thank you, Mr. Chairman. So since President Biden